So 2025 looks set to be another interesting one for markets. We have 5 key themes that we think will be the key driver across asset classes this year. The first one is America First, right? We know that this is a slogan that's been popularized by the incoming American president, but America has really been first for the last couple of years when you look at market performance, when you look at economic performance, right? And we think that the key driver there has been a much higher level of fiscal stimulus. And of course, the AI theme has helped drive the US equity market higher. We do believe that as we get into this year, that some of those themes will begin to broaden out. Other parts of the world will begin to participate more from an equity market perspective, but definitely lots of risk, lots of headline risk when it comes to those tariff threats. The second key theme is we believe that central banks are going to be, once again, a significant driver of uncertainty and volatility in markets, perhaps even more so than the last few years, right? So we know that in 2022, the first part of 2023, it was very clear that central banks around the world were hiking rates to fight inflation. And then after a pause, it was very clear through last year, most central banks were on a downward path when it came to the rate cutting cycle. Now we're entering a period where it's very much around what's next and what is the ultimate destination. What is that terminal rate? This is going to be a little bit of a test and feel approach by central banks to see, where exactly are we at that point where we're not driving inflation any higher, at the same time not tipping labor markets into a more painful point. That uncertainty you can already see, for example, in the December Fed meeting, it was very clear that markets did not like that approach where they're not very clear on what central banks might do next. And of course, after that meeting, markets sold off quite significantly. So expect lots of volatility driven by this less certain path for central banks in 2025. The third point that we have is, 3 potential paths for the global economy is, that uncertainty around whether we're going to have a soft landing, where the economy cools and inflation is reined in. This is still kind of the base case for most economies. Whether it'll be a harder landing, where again a recession is encountered, or no landing, which is where certain markets, certainly the bond market, is beginning to price in the sort of no landing scenario for the US, where maybe inflation is beginning to reaccelerate once again. We still believe that the soft landing is in play, and we expect inflation to continue to moderate from this path. But again, this will be something that the pendulum will swing over the course of the year, and these different outcomes for the global economy will be a major driver across markets. Our fourth theme is looking beyond the Magnificent Seven, right? So those Magnificent Seven, the largest and most liquid technology-focused stocks in the US, have been by far the outperformers over the last couple of years. But we do see that other parts of the world are beginning to see earnings growth pick up. Other parts of the US market as well, other corners of the market, are seeing earnings growth pick up. And those parts of the market that have not participated to the same degree, like the Mag 7, actually look a lot more reasonable from a valuation perspective as well. So we do think that you're going to see that breadth expansion, both within US markets, but also to markets outside of the US. Which really dives into our fifth and final theme, is that this is going to be a good year for active management, right? So this is, we come out of a year last year where, again, with those Magnificent Seven, if you've been passively invested with that large cap focus, you've done quite well, just being passive from that perspective. With this breadth expansion, the opportunity is certainly there for skilled active managers to begin to add value through security selection, and all of the risks that we've talked about along the way, particularly the tariff threats, the central bank uncertainty, is going to create a lot of cross-asset volatility where tactical approaches on an asset allocation basis can also add significant value.